The conflict in Ukraine sent gas prices through the roof. Could a ceasefire bring them back down? This is Sectors Up Close, and we're talking natural gas. It's more than 3 years since the start of the war in Ukraine caused gas prices to spike and led to a complete rethink of European energy policy as countries rush to end their dependence on Russia. Now, talk of a ceasefire is growing. President Trump will discuss it with Vladimir Putin on Tuesday, and this Monday morning, the German energy minister had to deny that there are any plans to restart the Nord Stream pipelines. Well, Wayne Bryan is research principal for European gas at LSEG. Wayne, could a ceasefire mean Russian gas returns to the market?
Well, we never rule anything out in these markets, as we've seen over the last few years, from the depth of COVID to the height of the war. I think at the moment, looking at it politically, it would be a bit of a challenge. And I think, as you correctly mentioned, the German defence minister has actually echoed that today. And it's something that's being pondered across the gas markets of late. We've had some rumours previously that there is going to be a resumption of flows, but looking at the EU's attempt to wean itself off Russian fossil fuels, I think it's going to be a hard sell. But again, as I said, you never rule anything out. But looking at it from a political viewpoint, I think it's going to be quite tricky. And don't forget, the pipelines would also take a year to repair, and there's an ongoing €5 billion court proceeding. So it's wrapped up in that as well. So it would take a huge shift in political views for that to happen, I think.
So has this attempt to wean Europe off, especially investments in LNG, been successful enough that they would no longer need Russian supply or want it, whatever happens?
At the moment, we've managed to sort of navigate ourselves away from Russian molecules by way of, as you mentioned, LNG imports, notably from the United States, who've really ramped up exports to Europe. Bit of a slower demand in China has allowed more of these cargoes to come. And of course, the European market priced itself at such a level to ensure we get these uncommitted cargoes arriving into Northwest Europe. So to some degree we have, yes. But if you look at the situation now where the prices are and the storage, some may say no.
You mentioned storage there. Obviously, the weather's now getting milder for now, but will Europe's demand for LNG stay high across the summer in order to meet this winter's storage targets?
Yeah, it has to. And if we look at the price now, I think it's been averaging this year around 47, 48 euros per megawatt hour since the turn of the year. If you take that back to last year, it was 27. So you can see the big difference in price. And one of the key drivers of that is the state of European storages at the minute, which are around the 35% mark. This time last year, it was at 65%.
Concern about filling storages, but also European countries are trying to negotiate their requirements of just how full those stores need to be down, aren't they?
Yeah, correct. And again, more news broke, I think it was Friday. There's talk of the current storage regulation means European storage players have to have their storage at 90% fullness by the 1st of November. Now, that has created this backwardation we've seen in the market. And what it's also done is it's allowed for some degree, a little bit of manipulation of the market. Players know that market buyers need to buy certain volumes of gas by certain dates. So prices have been quite high as a result. What we've seen is since the launch of this news on Friday, there's now talk of a less dynamic target or more dynamic target, whereby between October the 1st and December, storages need to be filled to the 90%, not that finite date of 90% on the 1st of November, which would ease the pressure somewhat and allow them to sort of gently fill these storages as opposed to this hard and fast date of November the 1st. What that's done today is take about 3% off the markets.
As you said, Wayne, a significant amount of that gas is coming from the US. So what's the impact potentially of President Trump's trade policies?
At the moment, a lot of these policies were, especially when it comes to LNG, in the short term, we're not going to see an immediate impact in terms of LNG because a lot of these projects were already going to come online. There was a few that were being held up by Biden, but it hasn't made a material change. What we do know with Donald Trump is his willingness to drill, his willingness to export, his willingness to circumnavigate existing environmental and obviously policy. So for us, it definitely is a little bit more bearish, but you're not going to see an immediate impact over the coming year.
Would it be feasible, though, Wayne, for Europe to promise to buy more American gas in an attempt to curry favour with the Trump administration and maybe avoid tariffs?
We already take a lot of it, so I don't think we need to persuade as much. I've seen a few Trump statements saying Europe needs to buy more and other countries need to buy more, but we've got a lot of these contracts in place. Our spot market's quite high, so we're attracting a lot of these, what we call uncommitted cargoes, because around 70 to 75% of global energy is already contracted. So I don't think that he's going to be forcing us into buying that gas, but he knows we need it. We need it in light, as I mentioned, the lack of Russian flows. So I don't think he needs to really put any pressure on, because our storage situation at the moment and the lack of alternative supply is putting the pressure on.
That was Bryan of LSEG. Don't forget, you can watch more videos on Reuters.com.